Hello and welcome to myfinanceteacher.org. Let's have a look today at the general stock market and energy, including uranium and natural gas. Intermediate cycles in the general stock market last for perhaps around a half a year. Within those, there are shorter-term daily cycles, which on average last for around a couple of months. We are now in an ongoing short-term daily cycle, which is now 22 days long. And after a longer cycle, usually a shorter cycle is quite likely. Although at 22 it's still a bit too short, so I do expect another perhaps couple of weeks or longer of a general downward momentum in the general stock market. But with the oversold levels on RSI with a couple of pokes below the relatively wide Bollinger Bands, I also do expect just a short term, perhaps a few days higher in the general stock market to recover perhaps the middle of the Bollinger Bands, perhaps that previous cycle low, before we drop back down into that short term daily cycle low perhaps in another couple of weeks or later. So yesterday morning, when this green candle was barely green, we did enter into a bit of a risky trade on the long side with S&P, which actually comes with very manageable risk levels because we've entered a stop loss just below that previous June low. If that support zone from June low is broken, then there might be quite a lot of carnage in the general stock market. So far, that trade has worked out well, and perhaps we're going to bring up our stop loss to the break-even point so that we don't lose capital, whatever happens to S&P 500. And of course, for regular updates, join us at myfinanceteacher.org. We've recently also looked at uranium with the members, and what we see on uranium is a cycle that is now 72 days long. Within this couple of months since the previous cycle low in July, the cycle has already brought RSI well into overbought area and has dropped RSI back down to just around 38-37. This is actually quite normal. If you look at the last three cycles, the same RSI behavior could be observed at the beginning of the last three cycles. RSI pushing higher into overbought before cooling down quite a lot, and a continuation of the cycle. Price pushing somewhat higher in a couple of cycles and maybe even significantly higher in the previous cycle before we see a cycle low later on. So for that reason, I do expect higher prices in the relatively near future, although I don't expect anything significant, perhaps only a modest gain in the remainder of this cycle. After all, we're already 72 days into this cycle, and on average the cycle lasts for only about 158 days. So there might be a bit of a short-term bounce over here for a while, maybe a new high versus the September high, but nowhere near retesting the April high before we drop down into the cycle low. And in expectation of that, again, a couple of days ago, we did enter into a URA trade, which again, so far is playing out well. And zooming out on the longer term chart of URAs, we see that there is a bit of a descending wedge formation. And statistically, usually a descending wedge formation breaks out to the upside. So that is a positive sign going further into the future. But again, in the short term, within the ongoing cycle, perhaps a retest of that upper boundary of this wedge before the cycle drops down to again retest the lower boundary. So as a member, if you are with us on this trade, you might perhaps want to take some profits with URA retesting some of the recent September highs. On the other hand, though, I am convinced that uranium should do extremely well in the longer term. And more details on that on some of the recent as well as upcoming uranium reports. And in the meantime, before those uranium reports, look at this sentiment level on uranium industry. We are now at relatively the same level of sentiment as we were in late 2020 when uranium price was around $32. And the uranium price right now is at around $48. So this relatively high exuberant optimism on the markets in the mid last year when uranium producers were pushing much higher has already subsided. Perhaps we might even see some small signs of a bit of a blood on the street coming up. And as someone said, you generally want to buy when there's this proverbial blood on the streets. And lastly, I want to have a look at natural gas because something interesting might be coming up in natural gas. And this is new information. I haven't discussed this with the members yet, Usually natural gas cycles last for around 115 days on average, but of course they can be quite short, lasting for only a couple of months and stretching for nearly half a year. The previous cycle was quite long. And after a long cycle, it's common that the cycle shortens to bring the overall duration closer to that historical average. And with a bit of a bounce relatively close to the 200-day moving average, I think there is a bit of a chance that natural gas is getting ready to start a new cycle. We see RSI came relatively close to oversold at 32. Zooming back, it's not often that RSI went deep into oversold on natural gas. So coming close to oversold at around 32 is a possible sign of a cycle low. We also see a couple of pokes below relatively wide Bollinger Bands. I usually like to see multiple pokes, but a couple of pokes again might be enough. Another interesting technical on the chart is this head and shoulders formation. I've discussed this head and shoulders formation with the members at myfinanceteacher.org over here in early September. I was expecting natural gas to bounce a little bit and drop down from this head and shoulders formation. That's exactly what happened, although I didn't expect this drop to be so soon at that time. And if you measure the height of this head and shoulders formation, a measured target below the neckline is actually going to be close to around $6.3. We're going to actually retest that with all of the energy crisis taking place around Europe. Well, I'm not really sure about that. It would actually be nice to see natural gas retest the 200-day moving average, but again, there are also signs for a possible recovery up into a new cycle. After all, looking at the optimism index on natural gas, it's at 45 right now. And yes, historically, over a longer term, usually a good buying opportunity comes when this optimism index on natural gas is somewhere around 30 or even below. But as I mentioned, in this environment of the energy crisis taking place all over Europe, a drop below some of the previous cycle lows on optimism index down to 45 rather than high 40s, with a couple of previous cycle lows, might actually be worthwhile your attention. And lastly, looking at natural gas seasonality, we see that since 2015, and this chart looks relatively similar if you go back 10-11 years, back to 2012, we see a bit of a decline usually in late September. We've actually seen that. Today is 29th of September, and seasonally, natural gas price is, of course, relatively strong into early winter. So what we're going to do here is we're going to see how the markets open in the morning for UNG. And if the markets open relatively close to highs of the last few days, that would be somewhere around 6% from the recent lows. One might be interested in a bit of a trade over here with relatively manageable risk levels. So that's my view on the general stock market and perhaps more importantly on energy. And from your perspective, let me know what you think about the ongoing energy crisis. Before you start on those comments, make sure to give us a like, subscribe to the channel, and have a nice day.